What is going on, everybody? TG here, back with another video. Thought I'd talk to you guys about Chargepoint again. I mentioned it a couple days ago, but I actually entered a position into it about 2 days ago, right after their secondary offering. And right here, they stated that they're announcing an offering of 12 million shares at $23.50 per. The stock obviously got beaten down badly because of it. The stock is now down 28% in the month and even down 18.2% this week alone. I think this is a great opportunity to get into one of what I like to call a spec play, future-looking spec play that is backed by solid numbers as well. So before we start this video, guys, if you could like and subscribe, that would mean a ton to me. Only about 8% of the people who watch these videos are subscribed, so more subscribers the better. It means a ton to me. But let's just talk about Chargepoint, because Chargepoint is one of the leading EV charging plays in the world. They have over 112,000 charging points in North America and Europe, compared to the biggest competitor, Blink, which only has around 23. Chargepoint also did 40.5 million revenue last earnings quarter, which is huge. So, you know, they're obviously out there. They're the leading one. They have very solid year-over-year growth, and I think this is a stock that is definitely something to watch out for. They did their secondary offering. They have a ton of money now. They can build more charging stations, get their network out there. A lot of people think that dilution or secondary offerings is bad, but in this case, I actually think it's a good thing. Obviously not good for the stock in the short term, you know, because obviously dilution of shares makes the stocks worth less. But essentially what they're doing is they're raising capital to then invest farther into their business, so that way they can last longer. So, you know, you look at pretty solid year-over-year growth, big profit margins as well going up. They are not profitable yet. This is just one quarter that, you know, shows them as profitable. They're actually not profitable. They just had one really good quarter. But I do like the fact that they are growing towards profitability, and I think that this is a stock that you want to own, because electric vehicles are not going anywhere. They're getting bigger and bigger, as we've seen, and this is the number one. This is the leading one. You know, you want to buy quality. When all is said and done, you want to buy quality, and this is quality. Chargepoint, they have the stations, they have the network in North America and Europe, and they have a strong balance sheet as well, and that is something you really want to look for. They have a ton of cash on hand, and now even after this secondary offering, they're going to have over $1 billion cash on hand, which is huge for the company. So this is a great thing to do, and I think that this is a stock that you want to own. I own it personally, so, you know, put my money where my mouth is. You guys can clearly see I sold 2 puts on it. We are down about $327 right now. Obviously not good, but you know, I think this is a great opportunity. Our average cost for it, not sure, but we're down 327. Bought one, and then it went down again the next day. Got another one, and unfortunately I could not get one today. Decided to get some more Boeing. Boeing took a hit. The entire market itself really took a hit today. You know, S&P dropping 0.7, Dow dropping 0.8, Nasdaq dropping 0.8, VIX spiking up. Just, you know, a little bit of a sell-off. Overall, a red week for the SPY, down about 1%, still up 2.2% for the month. I was having a really nice 6 months, same as the Nasdaq. You know, this thing's been hot. Not such a hot week, unfortunately, down 1.86%, but you know, you look at it comparative to all-time highs, and you know, the stock's only down about 2.6% from all-time highs. So, you know, we're still up there. We're still, you know, in a pretty high spot. But, you know, I think this is a good time to get in some of the stocks that got beaten down really badly recently. Stocks like Chargepoint. You know, it's having a really rough year to date as well. Again, the stock is well above about over $50, 50% off highs. You know, 49. Now it's trading at about 23. You know, very off its highs. You know, obviously, you know, stock doesn't have to go back to all-time highs. Obviously, that's such a misconception that people seem to forget. But it definitely is oversold on the metrics, RSI, all that stuff. But it comes down to what's going to happen in the future. And this company is backed by good fundamentals. Obviously, electric vehicles and, you know, charging stations trade at a higher multiple, but Chargepoint does trade at a much lower multiple than any of its competitors, which is obviously a good thing because you're buying it at a cheaper price. So the reason I decided to sell a put for 27 rather than just buy shares is because of I want to take advantage of not only theta decay, but I want to get paid up front. So if you think about it, if I got $5 per, you know, let's let's say I got $4 per for this, and the strike price is at 27. I subtract $4 from that, so my break-even price is 23. So, even if I had bought those shares, $4 or $5 ago, I'd have been down, over $1,000. But since I did this, my break-even point, if it finishes exactly right here on expiration, I just break even on that trade. So it's a way you can take advantage. Pretty high implied volatility. 70.75 is very high, especially if you look at these other ones like 30s, 20s. So obviously very high, and we're taking advantage of that implied volatility. So again, I believe in this. It's for December, so we give ourselves some time. It's only August 16th right now, so we have a couple months. And if it goes above 27, we just make full profit on it. If it stays under, then we buy shares at 27, but at least we got paid to do so. So just my thought process on that, why I like to sell puts rather than buy shares, just because I like having a lower break-even price, and I like getting paid up front and taking advantage of theta decay. So every day the option will lose, not much at all, $1. So I'll make $2 a day on theta. So it's not much at all, just because it is out of the money now, or in the money actually now. So it's not that much, but again, we're getting like $2 a day from it, so not bad. Something to do while you wait, passive income. But this is what I really think. I think this is a great play. Put my money where my mouth is. It's got its network. It's got over 112,000 charging stations, and they just did an offering, so they have a ton of cash on hand now. They can use that to reinvest into their company and further down the road. So while it was a pretty bad day in the market, buying the dips at a safe entry point, I think is a pretty good idea in this scenario. So that's really about it for me, guys. If you guys want to talk, hop in the Discord. We have a free Discord link in the description below. I'd love to chat with you guys. But enjoy your weekend. I'll be watching crypto this weekend. Obviously, I'm not trading it, but I'll be making crypto videos for you guys, since nothing really is happening in the market per se, because they are closed. So hope you guys enjoy your weekend. Hope you guys have a stress-free weekend and you can just relax. If you guys want to come talk, hop in the Discord. I'd love to chat with you guys. And again, if you guys could subscribe, that would mean a ton to me. So have a wonderful day. I will see you guys in the next video. Take it easy. Bye-bye, guys.